If you keep opening trade after trade and your account keeps bleeding, this video is for you. Overtrading is one of the fastest ways to destroy a Forex account because it makes you trade from emotion instead of logic. Most traders do not lose because their setup is bad. They lose because they take too many trades, take low-quality entries, or keep trading after they should have stopped. In this video, I'm going to show you how to stop overtrading with a clear system, not motivation. You will get the exact mindset shift, the exact trading rules, and the exact daily limits you can use today to protect your account and trade with discipline.
Overtrading is not just trading a lot. It is trading when there is no real edge, trading when you are emotionally triggered, or trading past your risk limit. That means you can overtrade even if you only take 3 or 4 trades, if those trades were forced and not part of your plan. The real problem is not activity. The real problem is low-quality activity. When traders feel bored, frustrated, afraid, or overconfident, they start clicking too fast and stop respecting their rules. That is when the account starts to shrink. The market does not reward speed. It rewards patience, selectivity, and discipline.
There are 4 main reasons traders overtrade. First is boredom. When the market is slow, some traders feel they need to do something, so they force a setup that does not exist. Second is revenge trading. After a loss, the ego wants the money back immediately, so the trader jumps back in without confirmation. Third is fear of missing out. When price moves fast, traders panic and enter late just because they feel they are missing the move. Fourth is overconfidence. After a win, traders start thinking they can't lose, so they increase frequency and take weak trades. If you do not know which one controls you, you will keep repeating the same mistake.
The first real fix is mental. You need to stop seeing yourself as a trader who must always be active. You need to become a trader who waits for the best opportunity and ignores everything else. That is the difference between a gambler and a professional. Professionals do not try to trade every candle. They wait for the market to come to them. They understand that missing a bad trade is not a loss. It is protection. The goal is not to be busy. The goal is to be accurate. If you can build this identity, half of your overtrading problem is already solved.
One of the strongest habits you can build is this. After a certain number of losses in a row, stop trading. 2 losses, 3 losses, whatever fits your system and psychology. The point is to protect yourself from emotional damage. A losing streak is dangerous because traders start trading to recover, not to execute. At that point, every trade becomes revenge. That is why the smartest move is often to step away, review the session, and come back only when your mind is clear. The market will be there tomorrow. Your capital needs to survive today.
Overtrading often becomes worse when risk is too high. If one trade can hurt too much, you will become emotional after every loss. That emotion then creates revenge trading. A simple risk rule helps a lot. Risk a small, fixed percentage per trade and never increase it because you are angry or because you want to win faster. Keep your stop loss fixed before you enter and never move it just to stay in the trade longer. When your risk is controlled, your mind becomes calmer. When your mind is calmer, you stop forcing trades.
Your environment matters more than people think. If you sit in front of the chart all day, you will eventually find something to click. That is why constant watching often leads to overtrading. Set trading hours and do not stay glued to the screen outside those hours. Use alerts instead of staring at every movement. Keep your trading space clean and remove distractions that trigger emotional behavior. The easier you make it to sit and overthink, the easier it becomes to overtrade. The easier you make it to follow structure, the easier.
A trading journal is one of the most powerful tools against overtrading. Every time you trade, write down why you entered, whether the trade followed your rules, and how you felt before the trade. This helps you see patterns. Maybe you overtrade after 2 wins. Maybe you overtrade when you are tired. Maybe you force trades after a loss. Without a journal, you keep guessing. With a journal, your mistakes become visible. Once a pattern is visible, it becomes fixable. When you are done trading, be done. Do not stay on the chart looking for another entry just because you are already in the mood. A clean session ends with a clean stop. Close the platform, write your review, and walk away. If you had a good session, protect it. If you had a bad session, do not try to repair it with more trades. Most overtrading happens after the trader should have stopped. That is why the ability to walk away is a real trading skill.
Here is the final rule set. 1. Use a daily trade limit. 2. Use a pre-trade checklist. 3. Risk a fixed amount. 4. Stop after repeated losses. 5. Keep strict trading hours. If you follow these 5 rules, you will cut a huge part of your overtrading problem. You do not need more indicators. You do not need more signals. You need more discipline, more structure, and less emotional reaction. That is how you stay in the game long enough to become consistent. If this helped you, the next step is not to watch another random trading video. The next step is to apply one rule today and protect your account immediately. Start with the daily trade limit and the checklist, because those 2 alone can change your results fast. This is the Sigma Trader. Stay disciplined, trade clean, and I'll see you in the next one.